Good evening, all. This is Shay Horowitz, ShogunTrading.com. This is our weekly newsletter. Um, Interesting times in the market. You can see this is a chart of the Dow Jones Industrial Average. You can see that it broke support and it's coming down quite hard. But, you know, Dow Jones Industrial Average is only 30 stocks. That's it. Broke the 200 week moving average. You know, we're diving and we have quite a bit of ways to go. Major support level should be right around here, about 600 points from now. Let me go back to daily chart. What I really want to show you is not Dow Jones Industrial Average, but the S&P 500. S&P 500, that many more stocks. And I think it's a lot more important. S&P 500 is now at the 1270 support level. 1270 support level is where it bounced twice already, and every time it's because the Fed steps in and rescues the market. The Fed is not allowing it, not allowing the S&P 500 to break the 1270. We have been in a downward channel for the past few weeks, and we talked about this before. And one of the tendencies of a market is once it's in a channel, you can see this channel, for example, is it tends to stay inside the channel until it breaks. And when it breaks is when it reverses direction. So as long as we stay inside this channel, we are going to stay in the same direction. What you have to look for is a break. But notice that right before the break, you have a touch. Let me paint it again. You have a touch of the line, and then it breaks, and then it comes back down. We might get the same thing over here, a touch, and then come back up. It is possible, and the reason why it is possible because we are at the 1270, and the 1270 is a very, very important support level. So that's what I'll be looking for this week. If we break the 1270, it's going to be a new low for quite a while, and a sign that the Fed is not protecting the market, and we could go for a serious dive. And that's something that, of course, you have to be prepared for. So that's the channel that we're looking at right now. So we have two options. We either break the 1270, which is a major support line, and the market goes for a dive, or we bounce off of it and come back up. Two very interesting options. Let me show you the weekly chart on the S&P 500, and you can see that it has also broken the 200-week moving average. All the moving averages are pointing down, and it's got quite a bit of downside potential. This was our uptrend before, our support line before, and we broke it, and it's not looking very healthy, but you know, it's something that needs to be done every once in a while. The market has to go through these kind of trends every once in a while. You can see the 1270 over here, how it was the breakdown point back in 2001 as well, and the market went all the way down to 800, 750. Do I think it's going to go that far? No, I don't think it's going to go that far. Does it have the potential? Yes, it does, and that's quite scary. One more thing I want to say about the S&P 500 is that we talked about this before. The fact that it made one top, another top, and then it made what's called a head and shoulders, what I call a head and shoulders, with the right shoulder a little bit lower, and that's what started this downtrend. So how did we take advantage of this downtrend? We went short. We went short basically across the board, and you know, we've been doing very well on the short side, and we're prepared for the short side. We are holding 5 short positions right now, and we're planning on holding them in case the market breaks this 1270 line. If the market bounces, we're going to close our shorts and enjoy the bounce back up. Some of our really nice shorts, for example, Tex, we shorted this one at 63.32, went all the way down to the 50.50. It's a 20% trade, not too bad at all. We also had ALD that did very well for us, 16.53 down to 13.78, which is also very nice. These are all just in the last couple of weeks. I mean, we've had a lot more stocks on the first couple waves down, but you know, we're not going to count those right now. HNT, for example, did very well for us from 25.94 down to 24.64, and these are just in the last week. Again, you know, something that just now is starting. Can show a few more. Yeah, we won't. Anyway, that's what you want to do. You want to take advantage of the market waves, and that's something I talked about before. You want to take advantage of market trends in order to protect your portfolio, in order to protect your other investments by trading the market. If the market, if the housing sector is falling apart, for example, you want to be able to short the housing sector. For example, KBH, we had a short on this one down here, and it worked pretty well for us. We had Pulte Homes down at 1197, and it's working very well for us as well. Whatever the situation is out there, if you are worried about housing prices coming down, you go short on the housing stocks. If you think that ethanol is going to become popular, you go long on the agriculturals. If you think oil prices are going to come down, you go short on the distillers, for example. So anyway, this week is going to be a little bit different. Friday is 4th of July. Thursday, the market is going to close early. So we basically have Monday, Tuesday, and Wednesday that are going to be kind of normal days. I still think we're going to be very, very low volume. I think that most of the trading is going to be done in the first hour of the day. I think that the afternoons are going to be extremely slow. But I think we're going to get plenty of opportunities the first hour of the day. Day trading lately has been great, especially the first hour. But anything after the first hour has been absolutely dead. So plan your days that way. Make sure that you're taking off after around 11 o'clock. And make sure that you're taking a long lunch period. It's gonna save you lots and lots of money. Anyway, that's all I have for you for this week. Enjoy this week. Stay safe. Watch the 1270 on the S&P 500. Remember that Thursday is a half day and Friday the market is closed. I'll talk to you next week. Take care.